Hi friends! Today we will talk about a controversial topic called the Martingale Method, how it works and why 95% of beginners use it and lose their deposit. This video is more of a warning. You need to treat this method very carefully. At the same time, I will explain how experienced traders use it and why. Most beginners have heard of it as a method where you never lose. You lose, double the stake, lose again, double again, and eventually you recover everything. It sounds good, but if it were that simple, everyone would be a millionaire. The Martingale method is a tool. It can strengthen a strategy, but it can also destroy a deposit in 5 minutes if used incorrectly. Today we will break down what this method is, why 95% of beginners lose money with it, when it can work, and the correct Martingale schemes. There are different ones. I'll explain the general structure and go into details. Let's start. What is Martingale? It's a strategy where after a losing trade you increase the size of the next trade to cover the loss and make a profit. The classic scheme is 1, then 2, then 4, 8, 16, $32. Each next bet is twice the previous one. As you can see, the risk of losing your deposit very fast is huge. It turns into a casino. That's why this method must be used carefully. Only in specific cases and with a specific approach, which I'll explain later. How do traders use it? Beginners usually do this. A trade goes negative, they increase the amount. Another loss, they increase again. They wait for one win to recover everything. In theory, one win covers all losses. But 95% of beginners lose their deposit in a couple of minutes. Why? Because there is no unlimited deposit. Even 5 Martingale steps turn $1 into 32. The market can move against you for a long time. Trends can last for many minutes. Beginners use Martingale without a strategy. They double randomly without logic. There is also psychological pressure. With each step, the stress grows, leading to impulsive decisions. Quick trading is high risk because short time frames have more noise and more losing streaks. Most people lose their deposit on the 4th or 5th step. That's why I warn beginners not to use it at all. But when does Martingale work? It may sound strange, but professionals sometimes use it. Only at strong levels, only with the trend, only with a confirmed signal, and only on 1 or 2 steps maximum. $1, then at most 2 or 4. They don't go to 5 or 6 steps. Never. This is not a casino. It's trade reinforcement, if there is logic. Logic means prior analysis of the currency pair, the chart, and economic news. You analyze, enter logically, and if there is a false breakout, for example here, in an uptrend, there is a sharp long candle down with a long wick, you could lose money here. The next step to recover with Martingale must also be logical and in the direction of the trend. That's critical. What is the correct Martingale scheme? There are several options. One is soft Martingale. Instead of multiply by 2, you increase by 1.3, 1.5 times. For example, $10, then 13, 18, 24. The risk is lower and the deposit lasts longer. The second option is only 2 steps. The trader opens a base trade and one reinforced trade if the first was wrong. As a rule, they don't go further. It is very important. Option 3. Reinforcement only with the trend. That's what I mentioned. There are false breakouts, but the trend is up, and as you can see, the situation correcting. Option 4. Reinforce only on a pullback instead of averaging randomly anywhere. You reinforce on a pullback and understand the trend direction. This comes from your analysis. Now I'll try to open a trade. I won't do it on purpose to make it losing just to use Martingale later. I'll trade normally based on analysis. I'll just open a trade. I'm not doing anything special to demonstrate the method. I don't use it regularly. The currency pair is euro. This is just an example. If the trade is unsuccessful, I won't double it. I'll act safely. I'll use about 1.5 and set a clear rule. No more than 2 times. Now is a good moment. The candle is forming. We open a sell trade with 100 and wait. If it closes in profit, great. If it closes in loss, I'll place 150 and still trade in the direction of the trend. The trend is up, so I'll wait for the right moment. It looks like there is a breakout here. I think it will reach this level and then reverse. It's already fluctuating. On the 15-second view, I think it will go back. If not, then we will use Martingale and I'll show it clearly. I recommend setting things up so you don't even need it and your trades are profitable. I truly wish that, but I also understand that it doesn't always happen. As you can see, it didn't work out. That's fine. Today we are analyzing Martingale and I'm showing how it works. We closed in loss, so we place 150, that is multiplied by 1.5. I set a clear rule for myself. I'll try this once to recover the loss. I won't go further. I'm ready to risk $250 total. Now I'm waiting for the moment to open a buy trade. Let it move down a bit. I'm just waiting for the entry. This method can recover losses, but you mustn't abuse it. I opened a buy trade and there was a breakout. If you look at different time frames and the overall trend, it's a false breakout. The price won't go down, it will move up. That's why I increased the amount and entered with the trend safely at 1.5 times with the trend and only once. I'm ready to lose this $250, but I won't go further to avoid blowing the deposit. Now the situation is turning and I think I'll recover my money and close in profit. As you can see, everything worked out well. We recovered the money. This is an example of the Martingale strategy. The first trade failed due to a false breakout down. We entered with a trend, followed the rules, used 1.5 to reduce risk, and closed in profit. I was confident in the move. There was a false breakout, but I had done the analysis and understood the trend and market movement. I approached this analytically. That's why I recovered the money. This is important. You need to think strategically in trading. The fewer random actions you take, the faster you get results. Now, in conclusion, the Martingale method is not a magic scheme that always recovers losses. It's a tool that can either strengthen a strategy or destroy your deposit if used incorrectly. 95% lose money. If you abuse it, you won't earn, you will lose. If you use it wisely, it can work to recover losses. You did solid analysis, then a sharp situation happens, a false breakout. You still trust your analysis, enter with the trend, increase the amount slightly, and it covers your loss and gives profit. The main rule: no martingale without analysis. Maximum 1 or 2 steps. Don't exceed 1–2% risk on the initial trade, and use it only in clear scenarios. That's everything I wanted to explain about this method. If something is unclear, ask questions. I'm always happy to answer. I showed an example: one losing trade, then a trend trade with a careful multiplier. Only once, and we closed in profit. You need to understand that this method must be used strategically and not abused. It's not a magic button to recover money. It's just one tool that experienced traders use very rarely. I hope everything was clear. I'm glad to see you on my videos. Wishing everyone stable trading. Good luck. Bye.